In the high-stakes world of Wall Street, few names commanded as much respect as Raj Rajaratnam. A self-made billionaire, his hedge fund, the Galleon Group, was a behemoth, managing over $7 billion in assets. His success seemed to be the stuff of legend, a testament to his sharp mind and aggressive investment strategies. But beneath the glittering facade of success, a criminal enterprise was flourishing, one that would ultimately shake the financial world to its core. This is the story of the Galleon Group Scandal. The year is 2009. The global economy is reeling from a financial crisis. But for Raj Rajaratnam, business is booming. His secret was a sophisticated and illegal web of corporate insiders. He cultivated a network of high-placed sources within some of the world's biggest companies, turning friendships and professional connections into a pipeline for priceless, non-public information. At the heart of the network were key players in the tech and finance industries. There was Rajiv Goel, an executive at Intel, Anil Kumar, a senior partner at the prestigious consulting firm McKinsey & Company, and Robert Moffat, a senior vice president at IBM, once considered a potential successor to the CEO. These men, trusted with their company's most sensitive secrets, fed a steady stream of tips to Rajaratnam in exchange for cash or other favors. The scheme was audacious. For instance, just hours before the public announcement that Warren Buffett's Berkshire Hathaway would invest $5 billion in Goldman Sachs, Rajaratnam frantically bought up shares, earning a quick $1 million profit. He learned from his sources about Intel's earnings, AMD's corporate maneuvers, and Hilton's acquisition, trading on the information before it ever hit the newswires. The illicit gains piled up, eventually exceeding $63 million. But the web of deceit was not invisible. Federal investigators at the Securities and Exchange Commission and the FBI had been watching. For the first time in a major insider trading case, they deployed a tool typically reserved for mobsters and drug lords: wiretaps. The recorded conversations were damning. Investigators listened as Rajaratnam and his co-conspirators openly discussed illegal tips. In one call, Rajaratnam was heard telling Anil Kumar, "I'm a warrior." On October 16, 2009, the empire came crashing down. FBI agents arrested Rajaratnam at his lavish Manhattan apartment. The arrests of his accomplices followed, sending shockwaves through the corporate world. The man who had once been the king of hedge funds was now facing the full force of the U.S. justice system. The trial was a landmark event. Prosecutors played the incriminating wiretap recordings, allowing the jury to hear the conspiracy in the defendant's own words. One by one, Rajaratnam's former allies, including Kumar and Goel, pleaded guilty and testified against him. The defense argued that Rajaratnam was simply a master of research, piecing together a mosaic of public information. But the evidence was overwhelming. In May 2011, Raj Rajaratnam was found guilty on all 14 counts of conspiracy and securities fraud. He was sentenced to 11 years in prison, one of the longest sentences ever handed down for insider trading, and fined over $150 million. More than 24 individuals were ultimately convicted in connection with the Galleon case. The Galleon Group Scandal served as a stark warning to Wall Street. It demonstrated that no one, no matter how rich or powerful, was above the law. The case redefined the fight against white-collar crime, proving the effectiveness of aggressive tactics like wiretaps. It exposed a culture of corruption hidden in plain sight and left an indelible mark on the landscape of American finance. A cautionary tale of greed, betrayal, and the spectacular downfall of a Wall Street titan.